So I've applied for and have been approved for a good amount of credit cards, I would say, at least compared to your average person. And that's been over the last few years of being heavy in the points and miles game. And it led me to think, all of the things that people told me when getting started in the game, right? Like, don't go for too many credit cards, you're going to hurt your credit score. Or if you get a lot of credit cards, you're not going to be able to get, favorable car loans or even home loans. And it just so happens that I can now reflect on basically every aspect of the credit game, almost all of it, with a recent experience I had. So I want to share my story of buying this house that I'm in. That's right, we just bought a house, and exactly where getting a lot of credit cards actually did hurt me. It almost cost me a house. So we're going to be talking about the effects of getting a lot of credit cards in a short amount of time by going for a house and how it can affect you. We got a lot of different freaking data points and things to go over in this video. So we have a lot to talk about. So a lot of people mentioned, so talking about from my personal experience with this home loan. So with this home loan, I was able to get, the best rate that this bank offered at this time, which I ended up locking in a 6.625% loan. And I got that with my score. Technically, my FICO is like 737 or something like that. I just looked like a couple hours ago. I'm also a real estate agent here in South Carolina. And what I realized is that over time, talking to a lot of lenders, a lot of banks, is that since times are tough right now and mortgage applications are at their lowest level in, what is it, 40 years? I think I saw since the 80s, something like that. Right now, banks and lenders are kind of starving for your money. They really want to make loans happen. So at what once was the best rates being like a 740 plus credit score, now are like down in, honestly, I've seen people in the 600, like 600s. The banks are touting like, oh, as long as your clients have a 600s credit score, we're able to get them, conventional loan 5% down, FHA loan 3.5% down, even some USDA loans, zero money down, 0% you have to put down with no PMI, all these different things that I'll talk about in a different video. But you can get all that with a 600 credit score. So credit scores don't mean as much as they once did, but it's important to have at least, I would say, probably 680 or higher. I think that's just you have that, a safeguard just in case things are going to hit your score and then you drop too low. Obviously, you want to have in the 700s, and most of you watching probably already in the 700s. But the second point that I wanted to mention, so that's just credit score, and that's kind of like the easy part, I would say, of all this. The second thing is what I alluded to earlier, which is how opening a lot of different credit cards almost kind of cost me a house. But maybe I'm being a little dramatic, but let me go through the process for those of you who haven't done it already, because I learned a lot and I wanted to share it. So the second thing is inquiries. So some of you may know, but on my channel, I've been kind of going crazy with business cards. I've been going very crazy with Chase Ink business cards specifically. And there's a couple of reasons for that. One, I'm not going to go into it, but one, it's very easy to get those cards, very easy to get the welcome offers, no annual fees, and it's easy spend for the amount of points we're getting back. Okay, cool. The second thing is I have accumulated a good amount of inquiries. I actually just checked really quick on my my Amex app, and apparently I have like what seems to be 3 to 5, and in some of them are actually a little higher apparently on all three credit bureaus. So Equifax, TransUnion, Experian. All my inquiries are fairly high, maybe 5 plus. We'll call it. Let's just say it's 5 plus. And what I realized is when you're actually going for a loan application, right? You're going through the process of buying a home. First, you have to get a pre-approval, and that's where nothing matters. It's just show your income, and they'll give you an estimate of what kind of home you can get approved for. Okay, cool. But once you actually put in an offer for a house and you go through the process with your bank or your lender, and they just say like, okay, here's where the fun starts, right? This is where the main documentation happens, where you have to put your W-2s, your 1099s, everything that you earn in a given day, in a given month, give that to your bank so this way they can actually approve you for this home loan. But what I realized is that when they pull your credit for a home loan, some of them are soft pulls, some are hard pulls. I got hard pulled, but they actually show you a full breakdown of your entire credit profile. I'm talking, every loan that you have active, every credit card you have active, even the cards that you have canceled in the past. It shows your entire rap sheet. So I could actually bring it up on the screen right here, and we can go a little bit more in depth on this because I think you guys would find it pretty interesting. So let's look right here. So now here is where you guys might find this very, very interesting. So you can see right here that this is what's called a letter of explanation. And what this essentially is the underwriter. So the person who's going to approve or disapprove of your home loan to, the final person, the final boss to be able to acquire a home loan and to actually buy a house. Now, they saw that I had not only this card that was acquired 820, you guys probably watched that video of my last application. It also showed this one right here, which was in June, just a couple months prior to that. Not only that, but you could also see three hard pulls with Capital One. Remember when they always say, oh, you get three hard pulls with Capital One? Well, here is where it's going to show up. And you could see 718, 718, 718. If you guys remember, this was the venture card that I applied for many, many months ago and I got denied. Well, all of these different cards, so my two ink cards and the three hard inquiries on my Capital One cards, all affected technically my home loan. And what these are letter of explanations to show that, hey, this is not a this is not a personal loan with the bank. I'm not getting a Capital One personal loan. So it's not new debt acquired. These are just credit cards. If they were loans, then this check mark would be checked here, yes. And I also had to write literally a written explanation that, I have this YouTube channel. I apply for a lot of different credit cards, not for anything crazy or nefarious. And that is something we had to write out and something we had to check off to the underwriter to make sure that everything was kosher and I'm not just some crazy guy applying for a million things of debt. And the underwriter's job is to make sure there's no fraud happening and that we're going to be able to pay this home loan off, right? That's the main thing. So that's the first thing that happens. So from what I understand for you guys in what to learn from this is if you're applying for a lot of different cards, like I'm doing, probably if you don't want to worry about that whatsoever, because my bank was lenient, they're already kind of familiar with me. I don't know how your bank or lender would, appreciate that. I don't know if they would let you just do a letter of explanation. I don't know if that's something that would be a deal breaker because they say, we don't know what's happening. We're not going to deal with this, right? We don't want to touch your loan. So for you guys who might be in this situation, and maybe it's a nothing burger, but it's something to know nonetheless. For you guys, maybe wait 6 months. Like if you're going for a home loan, something like that, I actually probably would wait the 6 months. In a worst case scenario, 6 months gives you enough time to where they're not going to pull that. My bank said they'll pull like 3 to 6 months in most cases, but just to know that this could happen. And if you do hit this step, honestly, I really don't think it's the end of the world. Most of the time, the letter of explanation should be fine. I don't think it's just unique to my situation, but just so you know that that is a possibility. So if you're going for a home loan, maybe wait. Maybe don't apply for anything in the last 3 months leading up to actually going through the loan application process. If you want to really save 6 months, something like that. Well, the second Oh, wow, wow, look at that. Congratulations. So now the second thing was the debt that was showing up. So now you should be able to see all of it right now. So you can see right here, there's a lot of different things. I'm going to block out some of these numbers, but you can see my entire rap sheet. I mean, almost all of them. So you can see at the top, this is my Tesla, debt that I have on the car left. So this is how much I owe on the car. And that's the only debt that I actually have shown other than credit card debt. This is my Chase Sapphire preferred. This is my built card, and you can see even my Merrick Bank card. This is my Yada card down here, and some other cards, my Kohl's card, what have you. Now, there's a couple of things that I noticed during this process. Well, one, it's going to every card that you have applied for recently is going to show up on your account. Okay, cool. So now the first thing is, if you look right here, these cards down here, JP Morgan, JP Morgan, JP Morgan. These are my three ink cards that I've gotten in the last 3 years. Okay. Now you guys are gonna find this interesting. And of course, everyone always touts like, oh, it's a business card. It's not going to report to your personal credit. Well, here's your firsthand experience at that. So you can see the balance on these cards right now are $0. It doesn't show anything whatsoever. And we hit the statement for all these different things. But what if I told you that at this current moment when they pulled my credit, that I actually had $6,000 worth of balances between these three cards? That's all right, $6,000 that was reported, but because it was on a business card, the Chasing cards, it does not report to your personal credit, thus being completely invisible to the bank. Now, if this was a personal card, like if these were showing on my Chase Sapphire Preferred or my Built card, now that would show up as debt and would thus impact my buying power on this house. If I had 6K here, the car, 6K here, the debt on the credit cards, then I'm hurting my buying power just by showing all of that debt. And of course, I could pay it off and we can make that work. But at least in the initial stages, you want to show as little as debt as possible. And I just feel if you're going to be carrying some sort of debt, if you have to, which I don't think you should, but if it just happens to happen, you'd want it to have it be on the business card like it did for me. These are now all paid off, so it doesn't really matter anyway. But at this time, it did show like 6K debt, something like that, and it didn't show up there. So again, if you're going to be showing debt or you have any debt whatsoever, but something to where you're actually able to show debt, or if you have to spend money on something and unforeseen expenses popping up, whatnot, put that on your business card. So this way, that's not going to show up as total debt on your account, and this way, it's not going to hurt your buying power when you go for a house. Okay, cool. So that's does that all make sense? Nice. So I love that. I saw that and I could verify it now. And then also Capital One, like screw you for the three hard queries. I mean, I knew it was going to affect me, but I also didn't know at that time that I was going to go for a house so soon after. So that was something that that I thought was pretty good to know. And I just share that to show that it's not the end of the world if these things pop up. And if it does pop up, you already know what it is, and this way you're not going to be fearful when you're going for your first home, or if it comes up in your second home, like maybe you just got into credit card points and miles. This is what is possible by being someone crazy like me and applying for a lot of different cards. So that's what's possible, and it's something good to know for you guys. Now, if you guys want to stick around, we have one more interesting point, and it's unrelated to credit cards, but very interesting for those of you because I know some people in the community would value this. So the next thing is I'm a real estate agent, what I mentioned, and I bought this house representing myself as my own agent. And when you do that, some funny things happen. So when you do that, you not only can represent yourself, meaning you can do your own negotiations. You don't have to worry about if your realtor is a little bit more fearful to ask for money for things or to repair things. You can kind of just talk head to head with the realtor who's selling the house, and you can get things done a little bit easier. So I'll just run some quick math. I can go more in depth on a different video, but if you want just a quick and smooth numbers, it's, let's just say, a 250K house. I was able to negotiate as being my own realtor, representing myself on this transaction because most people would be using a realtor anyway. I'm just going to use myself. I was able to get a 2.5% commission. So 2.5% times 250K house is about 6,000, a little over $6,000 in commission back to me. Of course, I have to pay my brokerage 20% of that just via being a part of a brokerage as a realtor, meaning I was net after buying this house about $5,000 back in my pocket for buying my own house. So that's pretty cool of being an agent. That definitely helped out a lot. And then a part of also my negotiation with the contract, I just asked that the seller would replace and completely get a new HVAC system. So the central air unit outside and some coils up in the attic system. So that ended up being another, I think, $5,000 cost to the seller. So all in all, kind of saved $10,000 on this whole sale of the house just by asking for things to be fixed and for me being my own realtor representing myself. So I can go more in depth on all the numbers on a different video, and let me know if you do want to hear that in a different video. And luckily enough, even though I actually overpaid on the house just due to me wanting to beat out every other buyer on the market because I'm not losing anything, I'm sorry, it's not happening today. I ended up overpaying, but luckily for me, the house ended up appraising for 3K over asking, meaning I'm walking into the house with 3K extra in equity, which is like, I guess, a 1% equity. So all in all, not too bad, and it was a heck of a process. So that's kind of where I've been the last couple of months. Which I guess technically on paper, if you do the math on everything that I footed the bill for, which was around 18,500, but I ended up getting back around $13,000 in value via things being fixed or appraisals coming in a little bit higher. Not too bad, not too bad. Kind of like credit card S stacking, right? Not too bad. As well as actually like moving in, right? Like anybody want a free TV? But just to know, have no fear. Even someone who is applying as aggressively as I am has been able to get through in the most favorable rates and really no downsides whatsoever for all of these different products. And let me know if you guys have run into issues with credit cards and applying for home loans, car loans, whatever over the years, because I want to hear all these data points so I know for the future. So thank you guys for being here all the time as always, and I appreciate every single one of you. Thank you so much.